Welcome to the wonderful world of accounting. It might sound like a topic full of boring spreadsheets and complicated numbers, but I promise you it's actually the story of how stuff works. It's the language of business, of life, and of that lemonade stand you once dreamed of opening. And to start speaking that language, we need to begin with one of the most important words you will ever learn: asset. It's a fantastic word, isn't it? It sounds so positive, so capable. And that's because in accounting, that's exactly what it is. It's something you have that can bring you value later on. So let's define this thing. An asset is any resource that a business, or even a person like you, owns or controls with the expectation that it will provide a future economic benefit. That sounds a bit formal, right? Let's break it down. Think of it this way. An asset is something valuable you have now that can help you make money or provide some kind of advantage in the future. It could be cash in your pocket, the computer you're using to read this, or even a brilliant idea for a new kind of toaster that also sings opera. If it has value and can help you down the road, chances are it's an asset. Imagine you decide to start that lemonade stand. What do you need? Well, you need lemons, sugar, and water. Those are your ingredients. You also need a table, a pitcher, and some cups. And of course, you need some cash in a little box to give change to your customers. All of these things, the cash, the table, the pitcher, even the lemons before you squeeze them, are your assets. They are the resources you own that will help you achieve your goal, which in this case is selling delicious lemonade and becoming a neighborhood legend. It's the stuff that makes your business. Understanding this concept is like finding the secret key to a video game. Suddenly, the whole world starts to make a little more sense. You start seeing assets everywhere. The delivery truck for your local pizza place? That's an asset. The building that houses your favorite bookstore? Also an asset. The phone in your hand? You guessed it, an asset. It's the stuff in the great equation of commerce, the foundational building blocks upon which empires, both large and small, are built. And once you can identify them, you're already on your way to thinking like an accountant, which is, I think we can all agree, pretty cool. Now, not all assets are created equal. Accountants, in their infinite wisdom, like to sort things into categories to keep everything organized. It's like sorting your laundry into whites, darks, and I'm not sure what color this even is anymore. The first major category we need to talk about is current assets. The key word here is current. These are the assets that a business expects to use up, sell, or convert into cash within 1 year. They are the short-term players, the sprinters of the asset world. They're all about providing value right here, right now, or at least very, very soon. The most obvious and classic example of a current asset is, of course, cash. Cold, hard cash. Or, digital numbers in a bank account. Since today is August 10th, 2025, and we're living in the future. Cash is the most liquid asset, meaning it's already in its most usable form. You don't need to sell it or change it to buy other things. You can use it immediately to pay your employees, buy more lemons for your lemonade stand, or settle your electricity bill. It's the lifeblood of any operation, keeping the daily gears turning smoothly and ensuring you can react quickly to opportunities or problems. Another fantastic example of a current asset is inventory. Let's go back to our legendary lemonade stand. Your inventory would be all the unsold lemons, the bags of sugar, and the stacks of paper cups you have on hand. These are assets because you plan to sell them in the form of delicious lemonade to customers very soon, almost certainly within the year. For a giant company like a car manufacturer, inventory would be all the completed cars sitting in the lot, just waiting to be sold. It's the stuff you're in the business of selling, and it's a huge part of the current asset puzzle. Finally, let's talk about something called accounts receivable. This sounds fancy, but the concept is simple. Imagine your best customer, let's call her Eleanor, buys 5 cups of lemonade but forgot her wallet. She promises to pay you tomorrow. That promise, that money Eleanor owes you, is an asset called accounts receivable. You have a legal right to that cash, and you expect to receive it very soon. For bigger businesses, this is a common occurrence. They deliver goods or services to another company and send an invoice, giving them 30 or 60 days to pay. That outstanding invoice is an asset. Alright, so if current assets are the sprinters, what about the marathon runners? These are the assets that stick around for the long haul, providing value for more than 1 year. The first group of these long-term heroes is called fixed assets. These are the tangible, physical things a business owns that it uses to operate, but doesn't plan on selling anytime soon. Think of them as the sturdy foundation of the business. They are the big, important items that you buy once and use for years and years to help you generate income. They are the stage upon which the whole business drama unfolds. Let's return to our magnificent lemonade stand. The table you use to serve customers? That's a fixed asset. You're not going to sell the table. You're going to use it every day for the next several summers to help you sell lemonade. If your business grew and you bought a small building to house your lemonade emporium, that building would be a massive fixed asset. For a larger company, fixed assets include things like machinery in a factory, a fleet of delivery trucks, office buildings, and all the computers and furniture inside them. These are the tools of the trade, the workhorses of the company. But wait, there's more. Not all long-term assets are things you can physically touch. This brings us to a fascinating and slightly mysterious category: intangible assets. These are assets that lack physical substance but are still incredibly valuable because they represent a special right or advantage. You can't stub your toe on an intangible asset, but they can be worth millions or even billions of dollars. They are the secret recipes, the famous names, and the brilliant ideas that give a company its unique edge in the marketplace. They are the ghosts in the machine of commerce. A perfect example of an intangible asset is a patent or a copyright. If you invented a unique, spill-proof lemonade cup and got a patent for it, no one else could legally copy your design. That patent is an incredibly valuable asset because it gives you an exclusive right to profit from your invention for a set period. Another great example is a brand name or trademark. Think of famous brands like Coca-Cola or Apple. Their names and logos are immensely valuable intangible assets because customers trust them and are willing to pay for their products. That recognition and reputation is a powerful, long-term advantage. So we've talked about current assets, fixed assets, and intangible assets. We've got our cash, our lemonade table, and our secret recipe for the world's best lemonade. But why does sorting and counting all this stuff actually matter? Why go through all the trouble? The answer is simple and profound. Understanding your assets is fundamental to understanding the financial health of your business. It's like a doctor checking a patient's vital signs. By looking at a company's assets, you can tell if it's strong and growing or if it might be in trouble. For a business owner, knowing your assets is crucial for making smart decisions. How much cash do you have to cover next month's payroll? That's in your current assets. Do you have enough machinery to meet a big new order? Check your fixed assets. Is your brand's reputation, your intangible asset, growing stronger? By tracking these things, a manager can plan for the future. Secure loans from a bank. Banks love to see a company with lots of valuable assets, and figure out how to invest for growth. It's impossible to steer the ship if you don't know what the ship is made of. But this isn't just for big-shot CEOs. Understanding assets is important for you too, as an individual. Your personal assets might include savings in a bank account, a car you own, or even your house. Knowing what you own versus what you owe, which is a whole other accounting adventure called liabilities, is the first step toward building personal financial health. It helps you create a budget, plan for retirement, and make informed decisions about your money. It empowers you to take control of your own financial story, which is an incredibly valuable skill to have in life. And so, we see that assets are not just boring lines on a balance sheet. They are the story of potential. They are the tools, the resources, and the ideas that we use to build our futures. Whether that future involves running a global corporation or just a really popular lemonade stand. I hope this has made the world of accounting feel a little less intimidating and a lot more interesting. It's a huge subject, but like any great journey, it begins with a single step. So I encourage you, keep exploring, keep asking questions, learn about liabilities, learn about equity, because the more you understand this language, the more you'll understand the world.